Good morning and welcome to another edition of the Morgans Edward Street Weekly Wrap for the week ending 14th of December. This will be the last edition for the year, so we wish you and your family a very Merry Christmas. Today we've got a very special treat. We've got Brad King, who's a Senior Portfolio Manager from Armitage Private, which is probably the oldest privately run fund manager in the country. It's been going for about 25 years now, I think next year, 25 years.
Yep.
And they've been exceptionally good performance the last couple of years, and especially this year. So I just want to ask Brad what he thinks about the market in general, key themes, and some general stock tips for the year ahead. So Brad, looking at next year, we've had a pretty volatile this year, obviously. Looking forward next year though, which is more important, what sort of themes are we looking at to be aware of?
Yeah, I think the primary point of focus in the Australian market is probably the financial sector, with the Royal Commission going through its challenges, I suppose, with having just confidence in investors' minds. So we've got the ex-dividend period coming through at the moment. A lot of the banks paying a lot of that cash out. So it'll be interesting to see whether that comes back in. But unfortunately, at the moment, we still haven't seen a bottom in where we feel the investors are coming in to step up and support these companies. So I think the Royal Commission findings and how that sort of progresses through the next 12 months will be key, because don't forget the banks were over 30% of the index in total, and now they're around about 20% of the index. So in terms of how they perform from here is still very important to our market. On the commodity side, again, that's another large part of our market. We expected a lot more volatility. We've had the currency going up and down a little bit. The commodities being sold off as well. So that provides some interesting opportunities, and obviously BHP and Rio with their buybacks as well. So they're the two things that are really going to drive our market from here. But I think we sort of trade within a little bit more of a band, and sometimes your short-term wins you're going to have to bank them and take a bit more of a aggressive trading view versus what for the last 12 months has been a bit more of a buy and hold type market.
And I know that you guys are very close to what's going on in China.
Mm-hmm.
What sort of themes do you see coming out of there for the next 12 months?
Yeah, I think China's in obviously an interesting spot. We've got the political interventions from Donald Trump and obviously now some of the holding of some people from Huawei in Canada, and then some of the obviously diplomats in China as well. So really hoping that sorts itself out sooner rather than later. Now I know the US are obviously trying to do a deal and look at some of the intellectual property that's potentially been used by China over the last decade or so as the US has looked to reduce their costs of labour. So trying to get some of that manufacturing back and re-establish a bit of a price for that. I think that still has a little bit to go. But geopolitically, yeah, if you think Australia was bad with Malcolm Turnbull going, you've still got the US, you've still got Brexit, and you've got the French now as well. So
yeah, that's right.
So politically, it's very challenging times. So, but from our export side of things, the currency's reasonably okay at 72. So, yeah, whether China starts to look at how they sort of moderate their steel demand and pollution, that'll be sort of an interesting thing to watch for the short to medium term.
And looking forward to next year on a stock-specific basis, if you're looking at a small cap and a big cap, what would you be looking at?
Yeah, I'll probably break it into three. I'll start with a large cap. Aristocrat's probably our key pick for the next 12 months. I think a lot of the focus has been on the social gaming side of things, but I really don't think the market has quite understood the leverage there from what they can produce. The margins are exceptional.
Mm-hmm.
You've also got a bit of a deregulation in the whole US market, even though it's state by state based. What you're seeing is effectively the move towards sports gaming coming through what's been a really tricky market for that type of betting. So really like Aristocrat to focus on its key games. So the pokies business is fantastic. That's sort of your core part of the business, but your upside is that social gaming side of things.
Mm-hmm.
Probably from the sort of large mid caps, we really like Webjet down here. I think some of the blockchain development they're doing with Microsoft is working out really well.
Mm-hmm.
They've been continually acquiring some companies to give them scale in that, I suppose, that hotel bed market. Now, they had a little bit of a challenging time through Europe, being a warmer period, and that meant that a lot of their customers basically stayed at home and perhaps enjoyed a hotter summer than usual rather than travelling to Spain and enjoying the weather down there. And on the smaller side, one of the reasons I'm actually up here today, caught the first flight up here, so I was a bit worried I wouldn't get here by the weather, but we went out and saw Lindsay Australia, so basically a transport company, but where we see the growth from the traditional transport is they're now Lindsay Connect, which takes them into China and looking to create basically a vertically controlled supply chain right to the port so that they can get basically their agronomists and all their agri data coming through their supply chain network to port and really adding some value to what's been a traditional low margin transport business.
Right, okay. And look, Armitage, thanks for that. And look, Armitage, as I said at the beginning, has obviously been around for 25 years next year.
Yep.
So congratulations.
Thank you.
Tell us a bit more about the funds and what sort of things make Armitage, I suppose, stand out.
Yep. So we have two parts mainly to our business. Our managed funds, which are available on M-Funds and a few platforms, and we're rated by Lonsec as recommended for those two funds. But we really focus for the managed fund side on income, and we think that's going to be really prevalent in this sort of market. So high dividend paying stocks, and we also use options not to leverage or take risk on the fund, purely as an income mechanism. So if we look at the market and where we think it's going to be for the next 12 months, sort of trading in a little band, we think the option premium, given the market's fallen, is some really good opportunities to really generate some good income. We also look after some, probably 2/3 of our business is in running high net worth wholesale portfolios, so direct equities based on Aussie equity shares. So that's really the core of our business and where it really started from 1995. So yeah.
Nice one. Well, Brad, thanks for joining us today. I really appreciate that.
No worries. Thanks for having me.
Pleasure. And look, that is it for the year. Thank you very much for joining us on these videos every Friday. Wish you all the best for you and your family. One last thing is BHP buyback that closes today, so you've got a couple of hours to get the money in. But look, take care, and we'll see you next year. Thank you. Bye.